Hello, it is Jessica Weaver, and I am here with my good friend, Megan Sherwood, or now Megan Croats.
Congrats, yep.
Croats. Now that you're married, we are doing a Wine and Wealth Wednesday virtually. So cheers.
Cheers.
Cheers, Megan. We have two different wines. As you can tell, it's getting nice out, Megan, so I like rosé.
I know. I want to transition. I just haven't yet.
Yeah, well, it was a kind of a cold day today, but I figure we're having some nice weather. I'll open up a rosé
Good
that I can
idea.
utilize. But Megan is a CPA out of New Jersey. She's also our go-to accountant for our Strong Retirement Club and our Money Empire program. She's part of our team, and she's such a valuable resource. I had to bring her to all you ladies because there's a lot of stuff going on with people's taxes. And we use Megan in the Strong Retirement Club because we want your money to be as tax efficient as possible. So we stretch it as far as we can. Same thing with our Money Empire program, which is more for women accumulating wealth. And as they're accumulating wealth, we drive them to get their incomes up to certain levels. And that has different tax consequences. So how do we navigate both those scenes? So Megan is awesome. She's going to be here tonight because we're going to talk about what is happening with 2019 taxes and what do we need to be thinking about for 2020 taxes. So Megan, thank you for joining us today.
Thank you so much for having me. I'm excited to be here.
Awesome. So this is our Wine and Wealth series where we're bringing on different team professionals every week through April and May to give you guys some fun, good, engaging content, especially now when we're all stuck at home. So, or cheers to everyone who's stuck at home and needs a glass of wine.
Yeah. I'm out with Jess and I tonight.
My assistant Lauren says, we all might be fat and alcoholics by the end of this, but as long as we survive, and we will survive, we will.
Yeah, it's funny. There's one of the health agencies is saying, just a reminder, alcohol is not how we should cope with everything that's going on right now.
The therapist would not agree with that coping mechanism.
Yes.
So Megan, the CARE Act just got passed, and that's $2 trillion getting pumped into our economy. How much of that money is actually going to be taxed to people? This is huge. They really are trying to help us, but how does that affect our bottom line as individuals?
That's a great question, Jess, and I think a lot of people have questions on this, so it's great that we're talking about it. So first thing, before I go into too much detail, there are a lot of specifics about the deal that have not been finalized yet about the logistics of how some of the money will be used and tracked. So there are some open questions for now, but I'll answer the best I can as much as possible.
Awesome. And then when we get more of those answers, we'll keep circling back to Megan and getting answers for everybody.
Yes, we will do one of these once we have some more concrete answers later on, but I definitely have a lot of good intro info for you now. So what's good news is on the individual side, if you're eligible to receive the payment, which is dependent on your income level as well as how many people in your family, if you're eligible for that payment, you're going to receive that based on your 2019 tax returns that have been filed. So backtrack, I know some of you may not have filed your 2019 returns yet because there was an extension on the federal return until July. So people have plenty more time to file their taxes, which is great. However, for this stimulus plan, they're trying to use your 2019 tax information. And to the extent that you haven't filed yet, they have to go back to 18. But from what I understand, that's going to happen in waves. So people who have filed 19 will get their checks potentially earlier than people who haven't filed 19 yet. So if you can file your 19 taxes, I encourage you to do so as soon as possible and make sure that your bank information is correct on your return, because the way that this is mechanically happening is they are direct depositing the money into the bank account where your last return went. Unless you get a check, they'll mail you a check. But obviously, we hope for direct deposit. It's a little quicker.
Yeah, so that's a good way to get money to you quicker is if you file for 2019.
Correct. 2019, as of the way that their plan is right now, having filed 2019 would benefit you in terms of timing. You'll get your money a little bit quicker. And what's great is the stimulus that the individuals will receive is not taxable. So you will not owe taxes on that later. There will be no withholdings from it. And even if you are in a position where you owe back taxes, that doesn't necessarily mean that they're going to withhold from the stimulus for you. From what I'm reading, about 90% of people, even if you had tax, they wouldn't withhold from this payment because it's considered to be an emergency payment and the people are in need of that. So they won't be taking that, they won't be garnishing it in any way.
So if you owe $4,000, let's say, and you're going to get, let's say, $1,000 from this package, they're not just going to say, oh, you owe $3,000 then.
Correct.
You'll get the full 1,000 and then you'll just owe 4,000.
You'll still owe your 4,000, and
later.
in some cases they're actually granting some not necessarily relief, but some relief to an extent, in that there are some tax bills that you are currently outstanding, they're actually going to stop accruing interest on them, which is similar to what some mortgage companies have done, where they've paused interest as well. Where your tax bills hopefully will be reduced by some interest and penalties during this time when they're considering this to be an emergency.
Oh, that's good to know. So let's go into, so it's $1,200 per individual.
Correct.
$2,400 for a couple, plus $500 per dependent.
Correct. And that is subject to a couple thresholds. It starts to taper off for an individual around $75,000. So if you make more than $75,000, that $1,200 will slowly start to dwindle until you make $99,000, at which point you don't receive a stimulus check at all. In this first round of relief, they didn't do any, there are no special accommodations for anyone who potentially lost their job in 2020 and maybe in 2019 was above those thresholds. So unfortunately, if you were above the $99,019, even if you don't have income now, you would still not be subject to getting a stimulus check. The plan for the government currently is that your needs would flow through unemployment in that case if you've lost your job as a result of the outbreak. So they basically what happened is they were in such a rush to get this passed that they didn't have the time to logistically agree on how to determine somebody's current need for this. Mm-hmm. So the best way to go, which would reach the most people, was using your 2019 tax returns.
Okay. Now, talking about filing, trying to file for 2019 as quickly as you can to get that relief package sooner, what is happening with the landscape for filing? Is the April 15th deadline still in play?
So for federal returns, the deadline has been moved to July 15th, okay. At which there's no incremental penalties or interest for that additional 3 months, which is wonderful.
Yeah.
Most states have followed through, but as of right now, New Jersey has not. So New Jersey is still technically April 15th. I know from what I'm reading that Governor Murphy has a bill on his desk that would extend it, and everyone's expecting him to sign it. He just hasn't yet. Mm-hmm. But definitely talk to your accountant to find out if your states that you have to file in have been extended, because if not, you would still have to get your states in, and some states require that your federal is filed first. So you'd have to still make the April 15th deadline. But what's good is if you file by April 15th, you could still make your payment date in July, because there's no penalty to extend your payment as long as you need to at this point through July.
Yeah, so if you don't have money right now, you have a little bit of a cushion.
Correct.
To get that payment done. And I think a lot of people get that mixed up. There's a state filing date and a federal filing date. Correct. Just like when we withhold for taxes in our paychecks, you withhold for your state and for your federal.
Yes.
Two completely different beasts.
Right. So the IRS came up with a plan to extend federal, but it didn't address the states. And I think a lot of people might be under the impression they have the extra time for the state as well. And that's not the case just yet for every state.
Yes, I actually got some Facebook messages about that when I was making comments about when to file. And each state is different, so you need to check with that and stuff.
Yes, and of course, if you're not an individual, if you're a C Corp or a partnership, your deadlines may have already passed. So obviously, work with your accountant to make sure that you're working toward the right deadline.
Yeah, you don't want to mess around with taxes.
No.
As I say,
you do not want to be on anyone's bad list for taxes.
No. You retire with a partner, just like in your working days, you have a partner that entire time, and it's Uncle Sam.
Yes.
And they want their money just the same. Yes. But there is something interesting. So part of this package is you can take out money from your retirement accounts without the penalty.
Correct.
But there's another big misconception about that. So there's a penalty, a 10% penalty, unless you hit certain exceptions, that they're waiving right now. But there's still the tax consequence.
Correct.
And I'm scared that people might start pulling money out of their retirement accounts, not realizing how much they're going to have to pay in taxes for 2020 on that money.
Right. That is, I was going to address that as well. So thank you for bringing that up. That is a misconception that a lot of people are currently under, is that when you take that money out, it is not tax-free entirely. It's just without a penalty. So if you're under the age of 59 and a half, anytime you make a withdrawal from your retirement account, you typically pay a 10% penalty, as well as regular income taxes at your income tax rate. So when you retire, you've basically been saving that money your entire life, and then your entire working life. And then once you retire, when you are using that income, it's subject to income tax at the time when you're using it. So when you're retired, you have to pay taxes on that money forever. So people think that just because the penalty was waived, the taxes were waived, but that is not necessarily the case. You will owe the taxes on the income. As soon as you use it, you'll have to start paying the tax on it once you withdraw it from that account. Now that, just to be clear here, that is only on a withdrawal. That is not on a loan.
So that's, again, two separate concepts. So
Correct.
Walk me through a withdrawal. I go to my IRA. It's $100,000, let's say. I take out $30,000. So that $30,000 gets applied to my income for the year.
Correct.
And
say that $30,000 is your only income for the year. You would, you have the option when you take it out of your IRA, the companies will give you an option for them to withhold income taxes from it. And they'll usually suggest 20 or 25%, which is generally a good estimate if you don't know your effective tax rate, which, in the year you might not know it. Or you can choose to take the full amount and you have to make a payment on that. So in Jess's example here, say you only took out the $30,000, you should expect to remit taxes of about $6,000 on that. Just a 20% guess, for our purpose to make this easy. You have to assume, put that $6,000 away because you're going to owe that money in taxes at the end of the year. Now, conversely, if you had just borrowed against your 401k, that is not considered income to you, and you're just taking a loan against it. So that money would be getting paid back into that account, and therefore you don't pay taxes on that right now.
Now, you can't take a loan from an IRA, but you can take a loan
from a 401k.
If you're working there still.
Correct.
Because they'll take that money from your paycheck to repay that loan.
Yes, it's automatically deducted right from your paycheck and funded back into refunding this loan. Essentially, you're paying yourself back through that loan.
Yes, and they want it to be repaid within 3 years for them to waive these penalties. Correct.
So on the loans, there is no penalty for taking out a loan currently.
Yes, thank you for bringing that up.
There are stipulations that the different companies will set that you have to pay back within 3 years. In most cases, I think every once in a while you can find one that will give you a longer time period, but for the most part, 3 years is the time frame.
Yeah, so I'm nervous. I don't want people all of a sudden, I have access to my retirement money. It's kind of like the floodgates open up. Now I get to use that money to live on, and they forget, well, all of that's taxable to them. So again, you take out $30,000.
Correct.
You be paying $10,000, $12,000, $15,000 on that money.
Correct.
So keep that. We're planting seeds. Keep that in the back of your mind, because you're going to want a strategy to how do you pay the taxes for that money.
Correct.
If you do take that, and always, always, always talk with an accountant about that. Talk with an advisor, because that's a big thing to navigate.
Yes.
And this is where a small mistake can cost a lot of money.
Agreed. And I have had plenty of clients who went to their 401k companies and withdrew money, and no one at the 401k company has an obligation to tell you about the taxes or to help advise you on what you should do. They'll just process the payment to you, and that's kind of on you at that point. So definitely, it's unwise to just talk to your accountant during tax time. During the year when you're making these decisions, you should always enlighten your accountant, just so that if there is a tax impact to you borrowing money or taking out money, that you're taking that into consideration.
I think that's a great point. You have to keep people in the loop, because sometimes it becomes too late to go back and unspend that money, untake that money out.
Correct.
So keep that in the back of your mind. And
depending on your tax profile, you could owe a penalty for being late on paying that money for the taxes. So if you're supposed to make all of your tax payments by January 15th of following each calendar year. If you didn't know about this and you talk to your accountant in April and you then owe, a considerable amount in taxes, you could also get a penalty on that, which is going to be difficult, in these times. So definitely want to make sure you're aware of it ahead of time.
Yeah, don't add more
Right.
Don't add more to an open wound. You know,
No, definitely not.
The last thing I want to touch on is loan forgiveness, because a lot of people are like, oh, my mortgage payments, some of those will be forgiven, or they're doing small business loans that they're saying are going to be forgiven. Now, when they say forgiven, what do they mean? Is it really too good to be true?
It's funny because I'm seeing it advertised and it does feel a little too good to be true, because a lot of the companies, and I can't speak for every single one, but most of the companies, if you read what they're offering, it's just basically a deferral of your payments or a holiday for your payments. They're not actually forgiving you those 2 months mortgage. They're just saying, we'll tack on 2 months at the end of your 30 years that you have left. So it's just a deferral of moving your money now to later.
Mm-hmm.
So in that case, it's not actually forgiven. And if it's not forgiven, it wouldn't have an impact on your taxes, but it'll impact, your interest and everything that you ultimately pay down the road. But it does give you the freedom of a few months, leeway. A lot of banks are offering 2 or 3 months where you can, defer your mortgage payments without a late fee or penalty.
Okay.
Now,
Yeah.
that is different though from actual forgiveness, which could happen depending on some small businesses are. Small business loans are being forgiven. I haven't heard of any large companies doing mortgage forgiveness yet, but to the extent that that happens, when you are forgiven of a loan, it generally means that you were given income essentially. So in most cases there, you have to pay taxes on that. So if you're a small business and you owed $50,000 and it was forgiven for you, you essentially made $50,000 more this year and would be required to pay an income tax on that.
That's a big difference.
Yes. Yes, that is very different.
Even if it's $10,000, that's $10,000 more of income that you actually didn't have, but it was forgiven, so it gets added to your income for that year.
Right. So you'd then have to pay another, $4,000 or roughly in taxes on that money, which is obviously something that you'd want to plan for ahead of time.
That's why this is so important to understand. It's great that the government's doing this and they're giving us options, and companies are giving us options, whether it's waiving a month or two of mortgage payments or giving business loans forgiveness. But you have to understand what are the consequences of this? Is it going to bite you in the ass down the road and throw you further into a hole? Or is it something that can actually really help you?
Right.
And that's why having professionals and experts like Megan, myself, the other people that we're bringing on to our Wine and Wealth series is so important, because sometimes we're so short-sighted. We're in this survival mode.
Right.
It's like, let me just get through the next day, the next day, the next day.
Oh yeah. And I think now, especially more than ever, there's a lot of panic going on with being unsure about your job and things like that. All of these things weigh into important financial decisions that you don't want to just put, taxes on the back burner and hope that it works out at the end of the year, because it very well could change your tax profile, and you want to be in a good spot for that.
Yeah, you don't want to be in a spot where you owe even more in taxes next year, and then you're scrambling, where am I going to get this money from? And I think this is the most important time to stay in control of your finances, or at least become most aware of your finances, your income, what's going on with your income, what's going on with your cash right now, your expenses, and now taxes. How are all these new things happening to my life hitting me with taxes? So I think the first step is figuring out what your options are, getting educated on them. How are they going to affect you down the road? Not just when we file again next year, but in 5, 10, 20 years. If you take money out of your retirement account, that's really going to affect your retirement date.
Yes.
And like you said, last thing, keeping people like you, Megan, in the loop as you're making these decisions. Go to them. And Frozen 2, Elsa says, fear can't be trusted. Everyone's in panic mode. Everyone's in fear mode. This is when we make the worst decisions, when we're in survival mode.
Yes.
So getting an outsider's perspective is awesome. And you brought up stuff that I didn't even think about. So thank you so much for this.
You're very welcome. I want to say one other thing too. And I saw a post about this, so I thought it was helpful. If you are home right now, and a lot of people are, and you have a ton of free time, now is a great time to try and get a hold of your finances. I've had so many clients who I ask, can you better track your expenses, or can you better do these things? And it's always time. We always don't have time for that during our regular lives. And right now we have a little bit of more free time, in a lot of cases, a lot of people are home. Now is a great time to try and sit back and look at your financial picture and say, okay, in a normal time, here's my income, here's my expenses, here's my cash. It's a great time to try and map that all out and get a better understanding of where you stand.
That's an awesome takeaway for this. So thank you, Megan. We'll do a
You are
final
very welcome.
speaker.
Thank you for having me. This was great fun.
Yeah, I don't know who else likes to sit around and drink wine and talk about money like I do, but I know you do.
I mean, it's better to do it on a webcam than to just be drinking by myself, right? So
It's not drinking alone if somebody else virtually is doing it with you.
exactly.
All right, so we'll get more information to you ladies. And thank you again for being a part of our community and a part of our team, Megan.
Thank you for having me. Bye.